Oh, well, maybe. Hey, we are live at 5. We're here. Miss Deborah's wondering where I'm at. I'm here, Miss Deborah. Miss Deborah, like, I'm waiting. It's 5. You said you'd be here at 5, and it's 5. I'm here, sis. I'm here. I made it. I was trying to get into the studio. You know, they got studios. I was trying to get into my studio here. Good afternoon, everybody. Good afternoon. Good afternoon. We all good? I hope everybody's having a really good Sunday. I'm live. Let me tell the people, go inform your friends that we're live. We're live and in living color. Arlissa is on live. I am live. Link youtube.com/at. Tell the people to come on and hang out with us, right? Tell the people that we are. Alyssa's on here. She's gonna cover some good stuff today. I keep looking over here because my pictures on Instagram is over here. So I will quit looking over there because that's not you. That's people over on Instagram. Hey, Michelle Stevens, how are you? Come on over and join me over on YouTube or on Facebook so that way you can see my screen. I'm going to put this in the chat so that way you can find me. youtube.com/at. I want you to be able to see the screen. That's why I'm saying come on over there. My mind went to a song, but I can't sing too many songs anymore because as the video gets uploaded, YouTube is real finicky about the copywriting. But I think you get a few seconds. I think you get a couple of seconds to say a song, but you don't get but a little bit, just a little bit. All you get is a little bit. Okay. Hi. Let's see. I'm trying to make sure. Hey, Adrian, how you doing? Make sure I got all my people here. Yes. Making sure I've got everybody covered, everything covered. And we are ready to rock and roll. Ready to rock and roll. I think I'm going to have to move that to a different screen. How about we do this? And we move this back to the other screen so that way, I move the pictures around, but then they need to be in the right place at the right time. So when we get ready to look at the pictures, we can see what we need. Okay. I think we're better now. We're much better, much better. This has been an interesting week. Yeah. This week in the market, kind of the prices went and did their thing. Right? So S&P definitely had a bullish week for the week. People were anticipating that maybe we had a couple of good green days, and then the price would maybe turn back when Powell made his announcement on Wednesday. But when Powell said he was going to pause, they were pausing the rate hikes, or I'm saying he because he's the chairman, but they decided to pause the rate hikes. When they decided to do that, the market just kept on going. It just kept on going, right? It said, oh, nope, we're not keeping us down. We got places to go, things to do, people to see. And it just went on about its merry way. Yes, it did. I'm opening up my chart. Anytime I open a lot of stuff on my computer, even though I have the highest internet they offer, it does seem to do its thing. So if y'all start seeing it act crazy, I shut everything down that I didn't need, so it would do right, because I needed to do right. I needed to be a do right. I needed my computer to be a do right man. So I needed my computer to be was a do right man. I'm going to share my screen. I'll put myself in there, and I'm going to present and share the screen. I have to talk myself through it because otherwise I will get sidetracked partway through the discussion, which doesn't make any sense. Like, what's going? This is the chart from last week, the daily chart from last week, which basically means that every day represents one candle. Okay. I do want to say, and I'll give this disclaimer real early so I don't forget later on. All the things we discussed today is just me discussing stuff. Okay. I'm just deciding to let you all in on conversations. And none of this stuff is trading advice. Everybody makes their own decisions, and you are the CEO of your own portfolio. So I'm just talking about some different things. Some of them may be interesting to you. Others of it may like be, I ain't interested in that. And that's completely fine. But just know our listeners just talking, right? I'm just talking. But yes, we had if we look at our chart from last week, and we're going to spend some more time later in this call, we're going to spend some more time looking at charting on some stocks, because I gave out some, if you follow me on any of the other platforms, I believe I put it on Instagram and TikTok. I may not have, but I know I put it on Facebook. The list of trades, we're going to talk about it today though, the different trade ideas, potential, possible, probable trade ideas. Okay, listen. But we're going to go through those, and then we're going to chart some of those stocks to see if the strikes that we have make sense, or if something better feels more comfortable. We're going to do a little bit of charting today, and I actually would like to do more charting all the time on our Sunday calls. I want to add charting into our Sunday calls so we can see what that's got going for us. Okay, we're going to do that more often. That's leading into, we're going to mention it now, so because I'm sure I'll mention it more than once, but I do have a charting workshop that is coming up, how to read stock charts. It's a workshop on November the 18th, and we're going to do it at 11 o'clock in the morning, Eastern Standard Time. I can grab this link real quick and put it in the chat. Maybe I can grab that link and put it in the chat or put it in the comments, because I want you to be able to take a check at it. I'm looking this way because I kind of see past the camera. Educator to trader talks. I'm typing it. Got to type and talk at the same time. Charting basics workshop. I think that should be it. Let me look to make sure. Charting basics. Okay. Yes, that should be good. That workshop's coming up on November the 18th. So if that's something you need, if you're somebody who needs a little more charting experience, you're not really sure how to chart support, resistance, trend lines, how to use some indicators. We're not going deep into indicators, but we will talk about it a little bit during that workshop. But if you are looking for some more knowledge and information about those things, then definitely investigate joining our workshop in a couple of weeks. Okay, I'm gonna take that off. I may turn this banner into a run-in banner, so that way it can run across. But I wanted you to see what it looked like for the last 5 days. Y'all see, this is what SPX looked like the last 6 days. I think 5 days. I can count. I know how to count. 1, 2, 3, 4, 5. I'm the math teacher. I do know how to count. But it's been green, and more green, more green. But we've come right on up to a gap just above. And we're going to talk more about that in a minute. But this is what last week looked like. So now we've got to think about or look at what is next week potentially going to look like. What's the opportunity happening there? This is the weekly chart, which means every candle here is a week's worth of data. Every candle here represents 1 week's worth of data. And you can see some trend lines have been put on here, which can be kind of moved around a little bit just to show you what kind of trends we're working with. Not that one, I want this one. And, many times these stocks respect these trend lines. Okay, you see how it's kind of in the middle of that trend line. You might want to keep an eye on that. Okay, let's see what's coming up for this week. What we're going to talk about during this time together, it's our time together. We're going to talk about the past week. We just kind of talked about that just now. We're going to talk about earnings. We're going to talk about the meetings that are coming up this coming week and how that can impact our trading for the week. We're going to talk about some potential trade ideas, and we're going to do some charting. Those are the 5 things I'm going to do. I've already done the first one, which was mentioned what happened last week. Earnings, the FOMC is part of the meetings. trade ideas, and some charting. All righty. That's what we're going to do. So hang out with me. Y'all hang tight. Keep watching. If you want to invite some friends over, send them, or invite, in the over, as far as like invite them into it. Just tell them to come on over and at least open up the YouTube or Facebook and follow along, right? We like to do that. We like to do that. Here we go. So our meetings for the week. We got some stuff happening. We go to Forex Factory, even though this is not about Forex per se. The Forex Factory is a place where you can go and see what's happening in meetings, and it gives you a thing all around the world. I only use USD, but you can leave it where the filter will show you all the other parts of the world as well, and you can see the different things happening in different places, especially if you're into like international stock trading or international. If you're doing, because if you are doing, it's maybe why it's called Forex Factory, because when you're doing the currencies and things, this is where you could go to find that out. We don't use it. I don't use it for that. I do not trade Forex. If anybody comes into your inbox talking about their meat and they're talking about Forex, that ain't me. That ain't me. I don't trade Forex. And at this point, I'm saying this gently, I don't trade crypto, but I've kind of gotten a little bit more interested. But I still probably won't talk necessarily about that here, because this is not what I do here. So at this point, not Forex. Crypto is something I'm just reading about and understanding a little bit better. All right. But I don't, at this point, don't trade crypto, and I don't trade Forex. So if anybody comes in your inbox talking about those two things, that's not me. Okay. Just so you know, if somebody comes in your inbox talking about crypto and Forex, that ain't me. And if it's not me, go ahead and I'm saying all this because I've had people to start to impersonate me. I guess one of my friends, like, I guess you've arrived. When people have started to impersonate you, then you've maybe arrived. So I don't know about that part. Just saying that I have some scam accounts that are not me. Some cloned accounts that aren't me. Okay, let's look at what's going on. On Monday, we do have FOMC member Cook is going to speak in the loan officer survey. That's tentative, but that's Monday at 11 a.m. It's a yellow folder, it says, for Cook, but that is happening tomorrow. Tuesday, November the 7th, we've got trade balance. FOMC member Barr and Waller are going to speak. Waller is getting an orange folder, and Barr only has a yellow folder. IBD tip economic optimism, yellow. FOMC member Logan is going to speak, yellow folder. Consumer credit month over month, yellow folder. They saying this is yellow. I really think what's going on with our consumer credit and such probably needs to switch over to orange, because there's a lot happening with consumer credit that is being like, shh, shh, shh. They lifting up this rug, shh, and they sweeping stuff underneath it. They're sweeping stuff underneath the rug. Okay, so Wednesday we've got Cook speaking again, and here we go. Ding, ding, ding. 9:15. Federal Chair Powell is going to speak on Wednesday morning at 9:15. He's speaking before the market even opened up. He's due to deliver opening remarks at the Division of Research and Statistics Centennial Conference in Washington, D.C. Okay, so as the head of the central bank, it controls short-term interest rates. He has more influence over the nation's currency value than any other person. Traders scrutinize his public engagements as they are often used to drop subtle clues regarding future monetary policy. So he's going to speak on Wednesday morning at 9:15 before the market opens. That's a red folder. It always is when he speaks, which I really feel like his speaking should be two reds. That's be like the double red folder. At 10 o'clock, we've got the final wholesale inventories. 10-year bond. Barr is speaking that afternoon at 2, and Jefferson is speaking at 4:45. That's after the market's closed, but those are yellow folders at the end. Maybe whatever Powell says before the market will do its thing on Wednesday, and it doesn't matter that these other people are going to speak in the afternoon. Thursday morning at 8:30, we have unemployment claims. That's a red folder. Mortgage delinquencies, which is showing as a yellow, but that probably ought to be an orange too. 30-year bond is yellow at 1 o'clock. And Powell is speaking again on Thursday at 2 o'clock. Let's see who he's talking to. He's going to do a panel discussion titled Monetary Challenges in a Global Economy. That's what he's going to talk about on Thursday at 2 o'clock. Thursday at 2:00, Powell will speak again. And so Wednesday in the morning before market open, he's speaking. And then Thursday at 2:00, he's speaking again. And those are always highly volatile times because people are waiting to see what he says. And then Friday, November the 10th, we've got FOMC member Logan is speaking. University of Michigan consumer sentiment, which they supposedly asked 500 people some questions, and it's a red folder. And then maybe if we do a little bit of research, we might find out which 500 people they ask, and do they ask the same 500 people every time? Don't know. Orange folder, inflation expectations, and then the yellow folder at 2:00, federal budget balance. That's all going on this coming week as far as meetings and stuff go, and that's a plenty. That's a plenty. We always tell our community basically to trade what you see. You trade what you see, right? Because you can anticipate. Now, we do use charting, and our charting is something that will give us some idea as to what's going to go on, what could potentially happen in the stocks, because you've got I'm going to leave that there because I can't see what it is anyway. But the what could potentially happen with support and resistance and trend lines and those kind of things, and many of the stocks do respect their lines. But you basically trade what you're seeing, right? And you do the best you can for technical analysis. And then you don't trade what you think you want to see. Let's say you put up calls, like I got calls going, and your call and the price is going down, and everything looks like it's going down, but you're believing it's going to come back, and it don't look like it's coming back, and nothing on the chart says it's coming back. Then you trade that's what I mean when I say trade what you see. We're not trading what we're hoping going to happen. If all the indications are saying that it's going one direction and you're trading in the opposite direction, then you can. There's nothing wrong with divorcing a bad decision. Okay, I ain't talking about nobody's marriages per se. I'm talking about bad decisions if you made a trade call and that's not going your way. You cut your losses and move on to the next thing. That's how we do that. So this coming week, we've got some stuff coming up in earnings. And we've got a bunch of stuff again. I'm trying to make it big enough so I can see these names. Because some of these cannot see. We do thank EPS Whispers for providing this earnings chart every week. If not following them on Instagram, you can. I think Instagram and Twitter, EPS Whispers, they give us this earnings chart every single week. But over here in the first Monday before open, we've got Dish and Axum and BioNTech Crystal, look like Technoglass, Fresh Pet, Air Lease. Y'all may not be able to see that. After Monday after close, we've got Realty Income, which that's anybody who does REITs, anybody in the REITs, REITs. I'm a fan of REITs because it's like dividend stocks, but it's for places that rent out space to companies. Real estate investment trust is what they're called. But Old Realty has earnings after Monday after market. NXP, Hims and Hers, Vertex, TripAdvisor, Diamondback, Clover, Goodyear, Fibrogen, and Celanese. That's all Monday after the market closes. Sorry if y'all can't see that. On Tuesday before market opens, we've got Uber and Celsius. Is Celsius those drinks? I wonder if that's those drinks that they see, the Celsius little skinny bottle drinks. Is that the Celsius we're talking about right here? Datadog is here. DR Horton, Vertex, ACM, the Lion Electric Company, Emerson is down there, right? Zimmer Biomet and Melco. Tuesday after market closes, Upstart, Devon, Oxy, Wish. Wish had a stock, but they're okay. Dutch Brothers, Axon, Gilead. Wonder if that's the Gilead, the same Gilead from the show. Y'all know that show with the Under His Eye? Do y'all, with the ladies with the red on? Do y'all know that show? Anybody know that show? I have REITs in my long-term account. Oh, good. Tell us which ones you have, Adrian. Yeah, what's the Under His Eye? What was the name of that show with all the ladies have on those red long coats and they had to walk 2 by 2 and they wore their little thing, the red hoods over their heads? What's the name of that show? Anyway, if anybody remembers it, y'all put it in the comments. But this was Gilead was supposedly where they lived. And Mosaic, eBay, Corsair. Y'all see how I just drift off into the rabbit holes and then I try to come back. I try to come back. Okay, Wednesday morning before the open, we have Roblox. And I don't want to say that. Oh, that's Fisker. I was going to say Pioneer. This is Fisker here. Warner Brothers, Under Armour is here. Village Farms, Biogen, Semantics is there. 3D Systems is there. Wednesday, after market closes, we've got AMC, the movies. AMC. And they've been doing pretty well after their whole deal with Taylor Swift. And I think they might have made a deal with Beyonce to put her concert in the movies. And that seems to be putting the Taylor Swift concert definitely gave them a little boost and such. So AMC's working on their stuff. They're a meme stock, but they yet holding on. They're yet holding on. Walt Disney, Twilio is Wednesday after close. Marathon, Affirm, HubSpot, Duolingo. I used to use Duolingo. I think the guy who created Duolingo is from Guatemala, which I used to live in Guatemala. And I use Duolingo all the time because I needed to learn Spanish when I was there. IonQ is there. Galactic is down here, and Digital Turbine. Thursday before the market opens, this is LI or Lee. Yep, Lee. Novavax is there. Oatly, I believe this is. Fiverr, Yeti, YPF, Tapestry, Sony. Those are all Thursday before market opens. I think Lee is probably a Chinese company or definitely Asian based on the characters. Thursday after close is Plug and Unity, The Trade Desk, Win, Petrobras, Aurora. I think this is Canopy Growth. Canopy Growth, I think, is maybe another one of the REITs. I think Canopy Growth is for those who are into cannabis. I think that's Canopy Growth. Model N, Soundhound, and Navitas. And on Friday before open, we've got Silver Spike, Arnold Ashanti, something like that. And Algonquin, Hudson, Capital, Creative somebody. I don't know, Creative somebody or other. AirSculpt and Soho House. That's all the people that are having earnings this week. All the people who are having earnings this week. So the bigger boys, let's put up in air quotes, the bigger boys did their earnings last week, but not meaning that these won't have their own moves. If you trade any of these stocks, I would, strongly caution you. If you're trading stocks and you're trading for earnings, you need to have a really good idea of what they're going to do, or you need to leave them alone while they trade earnings, because earnings is what we call a binary event. And unless you have a strategy that is earnings based, maybe you're using straddles or strangles. Those are two strategies that really seem to work well with the high volatility associated with earnings. Unless you're doing one of those strategies, you might as well just hold up till after they report earnings and then come back. Because otherwise you could see earnings as like, I don't like to say a gamble, but it's kind of a gamble, because a company can have good earnings and still can go down. A company can have bad earnings and still can shoot up. It's just like a crapshoot, basically. It's a crapshoot. Affirm and you'll have your eye on them. What is you? The Unity? Is you Unity? Is that what you is, Curtis? And Affirm. I used to trade Affirm. It's been a minute since I traded any Affirm. Okay, that was the earnings. Okay, let's move to our next thing, which is looking at some potential trades for the week. That's Unity. Okay. Tell us a little bit more about it in the chat, because I think I've seen Unity. Is it that? Tell me about it. Tell us, give me a little quick blurb, or give me a little cut and paste about Unity. Trade ideas. So this is just looking at some potential trades. I'm not stuck. I'm just I'm pausing. Looking at some potential trades for this coming week. Looking at 11/17 for expiration. Okay, one thing I always put in with the chat when I make these comments and I make this post on Facebook, I say to be sure that you do your due diligence. And they used to really irritate me when people would say, it would irritate me only because I didn't know what they were talking about. People would say, do your due diligence. And I'd be like, well, what is that? I didn't know what it was. So it would be upsetting for me. So I've said before that due diligence is to check and see, do they have earnings coming up in the time frame that you're going to be trading them? Do they have earnings coming up? Because that's, again, a binary event that could cause volatility in one direction or the other that you may not be prepared for, especially as a seller. As sellers, we kind of want stuff to do what they look like they're going to do. We kind of want them to do that, right? So watch for that. Watch if there's any news coming out, right? We do a lot. I do post several that are below $10. And some people are completely against doing anything that's below $10. I think that's completely cool. If you're trying to grow a smaller account, you might want to, lean into one or two of those. I wouldn't do too many. If you do, your whole account and all the smaller babies, then, you're just setting yourself up for a lot of volatility. And we've done that, right? Sometimes it works out and sometimes it doesn't. But you want to look for earnings. You want to look to see if they've got, some kind of event happening or some news or something that's coming out, what's being discussed. And probably first instead of last, you want to check that chart. Which is what we're going to do here in a minute, is we're going to look at some charts on these. You want to look for support and resistance. You want to see what it has done over the last week, 2 weeks, a month, a year. What kind of trend is it on? What is it? What's going on with it? And you want to do that. And I want to say, right off rip, everything starts with that chart. Everything starts with that chart. I've not pushed the charting piece as much as I should have, but I am now. Because everything really does start with the chart. Every indicator is based on that chart. Everything is based on that chart. So we're going to talk more about charts. And I hope y'all are okay with that, because we're going to do it every Sunday. We're going to do it every Sunday. I hope y'all are okay with that. Adrian says she's got O, DLR, and Stag. I think I have Stag. I have O, and I have another one that pays monthly. I have something that pays. I don't watch it closely. Okay, Unity is a software company usually associated with 3D rendering and video game engines. It's taken a big tumble since the pandemic. It was close to $200 a couple years ago. All right. Interested in call credit spreads. Any suggestions? The suggestions are on my screen. There's suggestions on my screen. We're getting ready to talk about them. Okay, so cash secure puts. We got Siri and we got Carvana for cash secure puts. Now remember that when you're selling puts, you're picking, your thought is that the price is going to go up, or at least it's going to stay up above your strike. Even if the price doesn't go up, it's going to stay up above your strike. All right. So you should pick a strike on cash secure puts. First thing is you should be ready to trade a stock that you don't mind owning. Even if you do all the stuff, the potential that the price can come down and you can be assigned is there. All right. So may not be high or low, but it's present. So you should trade the things that you don't mind owning shares in. And then when you get the shares, if you get the shares, you do covered calls. Or some people start the wheel. This is called the wheel strategy. Some people start the wheel with the covered call. They just buy 100 shares of the stock and they start to sell the covered calls. They start right there. They don't even wait. They just go straight to selling covered calls. All right. So AUTL, Siri is here again, and SoFi. Now you see Siri is on the cash secure put and on the covered call list. So you can then look at Siri and say, maybe I'll take it and then use Siri for an iron condor. I may use it for put credit spread or call credit spread, because covered calls means you got to own 100 shares. Cash secure puts means you got to put up the collateral, which for Siri, 4.5 times 100 shares is $450. You need to put up for collateral while this trade is running. All right. Call credit spread, put credit spreads won't use up as much money. They won't take as much money as far as collateral. Okay. Remember, as a seller, we don't really pay to get into anything, but our buying power is blocked off while those trades are going on. Okay, so you said plug it in prior. You said I meant sources to learn about cost spreads. Oh, cool. Now that we can do. Cool. So sources to learn about cost spreads. You can definitely check my YouTube channel, because I've got multiple videos about call credit spreads and put credit spreads and iron condors. I've got all those videos on my YouTube channel. There should be a like a watch list that's called credit spreads. Okay. How do you know from now what the strikes will be? Example, Amazon 134, 135. So Miss Cheryl, we're going to look here at the chart and we're going to see if that's a good place, if that's a good support or resistance. For Amazon, we're talking about put credit spread. So we're going to see if 134, 135 is a good place for support or is that a good zone? All right. That's what we use for that. All righty. Call credit spread list. We've got Taiwan Semiconductors, JPM or JP Morgan, and we got Twilio. Now, Twilio may not need to be on this list because we just mentioned that Twilio is having earnings this week. Didn't I just mention that? I believe I just said Twilio was having earnings. And if it is having earnings, we don't want, I think I looked at that to make sure that because I was checking this list to make sure nobody had earnings. But I think I just mentioned Twilio on earnings. I'm going to go look real quick to make sure to see if Twilio is having earnings because that's not what we want. Where'd you go? I need to go here. There we go. Let's go look. I need to change my share screen. Oh, y'all can see it. And let's see what Twilio has for earnings. Yeah, this is, I'm going to go daily. This is TradingView. TradingView. Yep, there's an E right there. This is TradingView. But you can use TradingView for charting for free. If your broker doesn't have charting, you can use TradingView, right? It's free. Now, if you want extra stuff, you want to be able to have more indicators and this, that, and the third, then you're probably going to want to pay for, they got several different plans if you want to do that. But if not, then you can just, use the free one. If you have something like Robinhood, and no shade on Robinhood, I'm just saying they have charting, but it's just not as extensive as some of these other people. Or if your broker doesn't have charting, you may want to, I do see that the screen keeps freezing, and I'm sorry about that. But yeah, you can use TradingView. All righty. Twilio does have earnings, looks like on November the 8th. I think it's November the 8th, which is coming up this week. So maybe we shouldn't have Twilio on our list because we kind of want to watch that. But the good thing about call credit spreads, this is a good place to make a point. You don't have to enter any of these sell trades the first part of the week. You can wait till the week, some time passes during the week. So after Twilio has earnings on Wednesday, then you can enter, if you wanted to still trade Twilio, you can enter it after they've reported, right? You can enter it after they've reported their earnings. For put credit spreads, we've got CCJ, Royal Caribbean, I believe it was RCL, Amazon, AMD, and Walmart. AMD had earnings last week, so did Amazon. Amazon might have been 2 weeks ago, and Walmart. So these are just some places. So let's see what we want to do. Let's see what we want to chart. If you got questions about any of these type of things, please go ahead and put your questions into the chat so I can answer them along the way. Okay. Let's see what's some good ones for us to look at. We're going to look at, let me get me a note so I can make sure I include all the people that we want to chart real quick. I want to do Siri. If you got one on this list that you really want to do, then mention it and we'll look at that. I'm a fan of Taiwan Semiconductors. Let's take a look at some credit spreads over there. I'm going to leave Twilio off. I think Miss Cheryl just asked about Amazon, so let's look at that one. What else? Maybe AMD. 3, 4 is probably going to be good. If you got one that you just want us to do, then let's bring it up and then we'll see what we can do. Okay, I'm going to minimize this and take us into the chart. I'm going to start with Siri. If you're here and you haven't subscribed to the channel, please do so. Go ahead and subscribe to the channel. Click the link, click the notification bar and all the good stuff. So that way you can, always see when we're here and when we're going live. I'm Educator2Trader in all the places. I am. If you want to, I would appreciate it. Follow me in all the places. Go ahead and, subscribe to the YouTube channel. so that way we can all be getting what we need to be getting. Okay. I did mention before, and I will mention again, that we are having a stock charts workshop, how to read stock charts. We're going to have that workshop on November the 18th. You can use this link. You can go to my Educator2Trader website. It is the first icon there, and you can get yourself signed up for the workshop. It's going to be in a couple of weeks. We're basically going to do a good little thing for basic stock charting with a little bit of indicators, a little bit of indicators. Going to look at some, how do we look for trends and that kind of thing? What are some candle patterns? I'm going to include all the little things like that, because I want to make sure. A lot of people don't know how to chart. They don't know. First of all, they don't know how to chart. Second of all, they don't even know why they need to chart. Because if you don't know, like, why learn that if I don't need it? And they really don't know how charting can help you make more money. And that's really the ultimate thing, is that people want to make more money, and charting is a piece of that. Okay, let's go look at Siri. See what's going on. Siri's got lots of gaps here. Let's do some charting. We're looking for support, resistance areas, and gaps or places here where price jumps from one place to the other. Those can provide some support and resistance. Because if you think about it, some people or buyers or sellers who were in the middle of here got skipped over. Let's say a person had an order in for, they said, okay, I've got shares of Siri, and I want to sell them at $4.70. Well, I want to buy them. Let's use as a buy. I want to buy them at $4.70. Well, the price jumped up and it jumped to $4.75. So the order to buy $4.70, to buy shares at $4.70, did not get filled, because the price jumped across it. Price jumped across the 470 and jumped straight up to 475. So the order for stock at the price of 470 didn't get filled. It didn't get filled. So there's buyers hiding in here. This is a buyer's gap, it's called, because price gapped up. There's buyers in here who had maybe orders set for different prices and they got skipped over. So if the price comes back down in here, those buying orders are potentially going to get picked up and price will go back up again, because when you buy shares, that's what makes the price move. Buying makes shares, makes the price move up, and selling shares makes the price go down. Buying and selling options is not what moves the price. It is the shares that moves the price. But options do like give you command over the shares, but the shares is what moves the price. Okay. So same thing here. This is another buyer's gap where there's buyers hanging in here. They got skipped over between 450 and 453. Some people, they might have said, I want to buy them at 451. They got skipped over, right? There's a few ones down here. If we're looking for a hard, I want to say hard, just a straight support area besides the gaps, the place where, peaks and valleys, we're looking for peaks and valleys. Way down here, there is a support, which is pretty far down here. Let me change this to solid. Now, I use the dotted lines for gaps, and I use the solid lines for regular support. When I say regular, quote unquote, regular support and resistance. And down here at $4.12, there is support. There's another gap between these two. So we might as well mark it. We're here, right? Might as well mark that. Let me change it to a dotted line. And we need to make it green. This is how I keep myself from forgetting what's what. So when I change time frames and I see these lines, I still know what's going on. So let's look for some resistance, because price is now up here at $4.95. Price is at $4.95. But we need something. What is resistance above us? Resistance is above you, something that is a peak that's above you that could potentially slow you down, right? Could slow the stock down. So we started here. This is current price, $4.95. This right here is a little bit higher. This is a peak. Come on. This is a peak. I don't want you. I want you. I want you. Okay, we want a horizontal line. Yes. Putting it there. Now, I put it at the top of the body. Some people put their support and resistance at the top of the wick. I also want to say that support and resistance is a zone. It is not a hard line. So when I put a line here, my line is at $5, but I need to know, and you need to remember that in this area, there is some room up and down. It's a zone, and this zone could actually go up as high as this $5.18, because you see price did go up to this $5.18. This is the high here. It did go up that high. It didn't close or didn't sustain that high, but this is a zone or a range. Price can move about around these lines. It doesn't have to be exact. Okay? Doesn't have to be as exact. Okay, I'll come back to your question, Plug-in Empire, because we can discuss that, but I want to come back to that question because that's a good one. Alrighty, so that's a resistance place around $5. If we were going to put one more, I'd put one more here at $5.29. Alrighty, I think when we looked at our graphic there, the graphic showed 4.5 as a call credit spread for 11.17. That's a little close. That's a little closer than I probably want to be. If I was going to select a call credit spread strike for 11.17, I probably would look at $5 or above. I would look at $5. Well, I actually think I said it was $6 for the call. For the covered call was $6, which would have been above these here. $6 was the cover call, and $4.50 was the cash secure put area was underneath it. Okay, they had a big old run up here. This wasn't earnings. This is Sirius had a big move. Some news must have come out over here back in July, right? That's went up as high as $7.76, but they hadn't been up there in a minute, right? At this point, they've got a few sets of resistance between here, where they are currently, and where that price is. So they've got things that gonna stop them. The graphic I gave you $6 as a resistance area, as a good strike. Sorry, as a strike, not a resistance area, because resistance area stops at 5. This one goes up as high as 5.58. So $6 will be a potential good strike there for a call credit spread, if that's what you were looking for. Remember, none of this is investment advice. I'm just talking and helping. They gave 450 I've gave 450 as support area here, and that's a pretty good, that would be a good comfortable strike. If I was trading Siri, I'd be comfortable with that, because we've got 2 support areas that are between there. So I would think, okay, everybody who's following me on Instagram, you might want to come on over to YouTube so you can see what's going on over on YouTube. Looks like nope, that's not what I need. Looks like the battery is getting low. The battery is getting, I'm looking for the charger, but I don't see. Okay, so that was Siri we looked at. Then we were going to Taiwan Semiconductors. Plug-in Empire said, I'm looking to cash flow around $500 a week using covered calls and call spreads. Is this possible? If so, about how much should I start with? Okay, so if you want to cash flow about $500 a week using covered calls, you can. Okay, so this is my thoughts. Covered calls per week, you're probably going to pull in 2 to 3% return on covered calls each week. Call credit spreads, you're going to pull in about 10%, depending on which ones you're picking and whether you're, we have a strategy that we use where we do call credit spreads and stuff every single day. SPX playbook dot. I'm going to put dot. I'm going to write the word dot, and then you can put the dot in there, because Facebook be tripping. But we have a strategy that we use where we utilize SXP credit spreads, call credit spreads, and put credit spreads. And we use SPX call credit spread and put credit spreads. And we can pull in about 10% per day. So you're comfortable. That's a little more aggressive. It can be. It's doable, very doable. But if to be, for a newbie, I probably would say shoot for, 5 to 8% each day. And you can use that strategy to rinse and repeat the same money every single day. But if you're doing regular stocks, like not those, and the reason, I'm saying it all kind of fast. SPX and XSP, the reason we use those is because they're cash settled, which means at the end of the day, at the end of the trade, there's no shares to get. So if the price is not at your strike, you just keep your money. If the price is at your strike, you pay the money. So there's no shares to worry about getting assigned. That's why we like XSP and SPX. And XSP is the mini of SPX. All right. It's a one spread. We do call credit spreads, put credit spreads, and iron condors on that every day in my community. Right. You can use that SPXplaybook.net. I put in the chat. We'll give you the exact strategy that we use. All right. And it's only $27. So if you want to grab hold of that, then go ahead over there and grab you a copy of the playbook for $27. But if you're trying to pull in $500 a week with call spreads and or things, it's going to put 10% a week, between 5 and 10% a week is doable. So that means you're going to need about $5,000 that you're going to, because that's only 10%, right? If you want to pull in that each week, about $5,000 or 5,000 plus, utilized properly, is going to be able, to get you a good return on that money. Okay. And if you want to talk more specifically about that, send me an inbox. And we can talk, we can talk in the inbox. We can talk more strategy. So that way you can get more specifics. All righty. This is Taiwan Semiconductors, and it has a huge gap. What happened back here was this news. Something happened that started all this. Fundamentals against geopolitical risk, strategies leave, NVIDIA can survive, the latest chip wreck, how we know, yada, yada. So this little lightning bolt thing at the bottom gives you a little bit of news if you're using TradingView. This gives you news if you're using TradingView. Okay. But we got some gaps that we're looking at. I'm going to move some stuff around here so we can see this, a big old one up here. Let me move some of these lines because these lines, they don't go anymore. They don't go anymore. Okay, that one is correct. That's where it should be. This one we're moving. See, there's a buyer's gap. All this price between $87.69 and $90, the price jumped up with this news back here. That price jumped up and left some room for the buyers. Left some buyers holding the bag, and they're like, "We ready to buy, but we can't buy because y'all skipped us." So everybody between $87.69 and $90 who might have wanted to buy, they can't buy, right? Because they got skipped. This blue line that's going across here is the 200 period moving average. And the 200 period moving average also provides support and resistance. It takes the last 200 periods, or in this case, the last 200 days, averages them together, and it creates a moving average, right? So that you see how price popped up to it and then came back. Like the moving average was like, get back. So it didn't go there, but we've got some gaps just below the price, right? And we were looking at Taiwan Semiconductors. Let me see if I can find the graphic. TSM, we were looking at a call credit spread at 92.93. 92.93. Well, that's just above this moving average, which again, the thought is that this moving average is going to provide resistance. So 92.93 for at least for 2 weeks. It's got a lot of room down here. It needs to go grab some stuff from down here too. So that could potentially be good as well. You could also look at this and say, if it's got that, we may be able to put us a put credit spread underneath current price, right? In some of these gaps, you can maybe put you a good put credit spread down in the 89.90 range if you wanted to make it an iron condor. And an iron condor is when you have a put credit spread and a call credit spread done together. That's called an iron condor. Nothing fancy, just got a fancy name, but it's a put credit spread and a call credit spread done in conjunction. That makes it an iron condor. All right, let's go look at Amazon. Amazon. Cool. Let me go back to TSM because I don't think I put a resistance line on here. So this actually where this one is a good one because this goes to, remember we're talking about peaks and valleys when you're talking about support and resistance. So this is a peak. It went up as high as 94.76, but it closed at $93. Closed at 93.03. So this is some resistance. This is resistance above the current price, and support would be below current price, which this one's pretty far away. There's some in here too. There's one right in here. Let me take it off of the regular line. That's about $88 is a support area as well. And remember, these gaps provide support. All right, because there's buyers in there. Price will come down, pick up a buyer, doop, come down, some buyers jump in, and boop, price will go back up. So those provide support as well. Let's look at Amazon. Let's look at Amazon. Okay. Amazon's got some gaps going as well. Some pretty big ones. This Amazon had earnings last week on the, what's this, the 26th, 27th. It had earnings in that window of time. Let me turn this to green. That's another buyer's gap there. We've got one here. Between 127 and 774 and 129.72. There's one. There's a big one between 120 and 126. That's a gap as well. There is. Now, I'm only looking at the daily charts. Many times when you chart, you should, look at different time frames depending on what you're trading. Depending on what you're trading. If you're trading things that are going to go for you swinging or you're going more than a day, you should always look at the daily. Take it back. You should always look at the daily chart, and definitely weekly, monthly is definitely weekly. I like daily. Yes, always. And then if you're trading for shorter periods of time, you want to go shorter in the time frames to check your chart, because there may be some support and resistance zones that will show up on smaller time frames. Right now, all we see is a big candle for the day, like this big red one. We see a big candle for the day here, but all kinds of stuff happened during that day. So you get to shorter time frames, you begin to see where did you have some support and resistance just all in this Wednesday, October 25th. There could be price action that happened in this November 1st, right? You want to go and look at those as well. Okay, I'm deleting these gaps because those gaps got filled in, I believe. So we're here. We're here with support would be this. Well, let me put one more here because there's another little gap up right here just below, which is between 137 and 138. Between 137 and 138, there is another gap, which is, see how the prices kind of come down in here. And then if we're going up into our like resistance areas, you've got this peak up here, but you also have another gap that's just above the fray. That's 142 going up to, and the reason we bring up gaps like to be filled. Gaps like to be filled. So they don't always feel immediately, but they at some point in the future, nature abhors a vacuum. So a gap will be filled at some point in the process. Actually, this gap that's one between these two, between September the 19th and 18th, that one's not all the way filled yet. These prices here didn't fill it all the way. So there's still some room. There's still some sellers in there. This is, if a gap's down, this is a seller's gap. I'm going to put a little note here so that way we can see what I'm talking about. This is a seller's gap, which means that if price jumped down and it skipped over some sellers. There are people who are like, I got 130, 139.50. I've got some I want to sell at that price, and y'all skip me. So those sellers or those orders are sitting in there waiting. All right, waiting for that to happen. If it jumps up, a buyer's gap. If it jumps down, seller's gap. That means there's sellers in there. A buyer's gap means there's buyers hanging out in there. Sorry for all the lines, but remember, I just put a line. So the lines are like, there's a little bit of a zone there, and dotted lines for me are gaps. So Miss Cheryl asks, how did we know about what did we say? 134 something. Let me go look at the thing real quick. 134, 135 on the put credit spread Miss Cheryl was asking about. Well, 134, 135 puts us just above this little puts us just above this buyer's gap here, and something happened over in here where it gapped down. This is actually at 135.45. It would be good to go to a smaller time frame and see what actually happened over here between Wednesday the 20th and Thursday the 21st, and see what happened in there. And or if there's some, like I said, these big candles, something happened over in this big candle. In this candle right here, something happened in that candle. So that's why you go to smaller time frames to look at support and resistance on smaller time frames. You can see what kind of support and resistance is in there, which could give you an indication for your strikes. All righty, we got one more. AMD. Always want to look on the daily chart. You want to look for support, resistance, and I usually chart gaps because I want to be able to see where there's potential support and resistance. On this particular one, I'm also going to do, I'll look for a little trend because I didn't look for trend stuff before this. I will on this one. Okay, nope, I don't want you. Delete. We're going back up here to the lines. Putting us a line right here, which should not be dotted. It should be solid. Solid. Solid as a rock. Okay. Current price is up here. Let me pull some more information from behind me because we got to see if current price is at 112.25. I'm on AMD right now. We want to find a peak above that current price. And there's a bit of a gap right here. Peak would probably be at 116.80, but we still need to look at this seller's gap that is hovering just below that. Hey, over on Instagram. If y'all are over there and you want to see my screen, you got to come over to YouTube or Facebook. I put the link in the chat. You can come over there and you can see my screen. Okay. So we've got a little bit of a seller's gap here. Let me put a little thing. We'll type it up again. There's a seller's gap right there. Okay, which is from 114.94 to 116.36. Resistance would be in that area, right? Or what did our graphics say was our, I think we did a put credit spread, AMD 107, 108. Ooh, there's a lot of stuff happening here. So this is a good one. Right here, you've got where price pauses. So we look for peaks, valleys, and pauses. I didn't mention the pauses earlier. Sometimes it's good to change your chart from candles to a line so you can see what happens in the line. This basically shows you a place here. Nope, I don't want that. I want this. Shows you right in here that price paused. It's like, let me sit here a minute, get some rest, and get me a chair. That's what it's called, a chair. Take me a chair for a minute, and then I'll go some more, right? That's what it did. So this lets you know that this may be a support or resistance area because price paused. That was a pause on the price. Okay, I'm trying to get rid of this text thing. All right, so let's go back to the candles. All this stuff I'm doing and talking about is going to be included in our basic workshop. So, oh goodness. So you're going to want to come over and see what we got going during the basic charting workshop. I want you gone, and I want you gone. There we go. All righty. So in this zone is our support. This is where our support is because price took a chill pill wheel, and price took a chill, and that means there's some support here between. That's 107.96, and our strikes that we had on the graphic was 107, 108. All right. Looking for trends. I'm on the daily chart. If you're looking for a trend, you're going to be kind of looking at where did we get us a trend line over here. Nope. Let me change to the one that says trend line. You get you a point here and move it. I'm going to have to adjust that one over there. So this goes up, you pick a high place, either there. We could have actually started the trend here. Either one would work. And you're looking at it to go, where does this trend showing us? And then you can do one from the bottom. I probably would do a different one. Let me see. I'll move this to here. You could draw trend lines till you're blue in the face, because there's multiple trend lines that could potentially be going on. And you use these trend lines, though, to then help you look and determine what direction we're going and what will price potentially do, because sometimes it stays. And then there's chart patterns that have to do. You might have heard of falling wedge or rising flag or some other things like that. Those are all chart patterns that people utilize to determine or to see what price may be doing in the process. Okay. All righty. So we have covered so much stuff today. No, I don't want to present. I want to stop sharing, actually. We have done, I think I've done what I've said I was going to do. I wanted to talk about last week, SPX and suchy. And I wanted to, well, you know what? I did all that charting and didn't necessarily look at SPX. So I am going to go back there. I did the charting of the different things. We looked at earnings, we looked at meetings for the week, and we looked at some potential trade ideas for the week, right? If you didn't see those, you go over to my either Facebook page or the Facebook group. Educator to Trader is our group. You can find us in all the places at Educator to Trader. I'm going to share my screen one more time because I didn't chart SPX and I wanted to do that. So let's do that. If there's any more questions, y'all want to pop them in the chat, because we're, as they say, we're landing this plane. Plug Empire said, I'm going to check it out. And thank you so much. I'm definitely looking for more strategy and compounding my portfolio safely. Yeah. I've been trading Forex for the past 3 years, and consistency is tough in the game. Okay. So consistency is one of those, getting over our psychologicals and consistently making gains is something that all traders deal with. And anybody who tells you they don't is lying. Flat out. Okay. Anybody who tell you that they up all the time, they're not being honest, because none of us are up all the time. Okay, let's look here, see what SPX has going for the day. I want to go back to the month, to the weekly first, and let's see what the week looked like. We did see this chart, but you all see how this channel is going. Of course, it can bust out of the channel at any time, but this was a good green last week, and it looked like it may come back into, this is a weekly chart. If we're looking for support and resistance, support is down here at 41.15. Right, so it bounced right off of this and ran for the moon, and above where we are, actually that may be a daily. I won't take this gap off yet, because it's probably on the daily, from the daily chart. But as far as the weekly chart goes, there's no gap here. Resistance though would be up in the area of, if we're looking for weekly resistance, it would be up in this area. No, I want a horizontal line. It will be up here in this area at the 45.10, which is up pretty high from where we currently are. There's one in here too, where some price dipped here. So I would also put a support line in there at the 43.69 area, right in there, which is, you see right at the top of these candles, you can kind of see that that's where it kind of did some turning there too. Now we go back to the daily chart, and that gap is still there. Notice the gap I told you I wasn't going to take off the chart. It was created between September 19th and September 21st. Sorry, the 20th and the 21st. This gap was created. Let me put a little note here, so that way the next time I come back, I won't be wondering where it came from. Okay. I will know where it came from. There's a few of them price gapped up. Even during this past week, we've had some gaps that happened. Let's include those into our discussion. Okay. We're still inside of the channel, the trend line that we had talked about. We're still inside of there. Again, prices can always pop outside of their areas. If they want to, they can always pop out if they want to. Support, these gaps do provide support and resistance. We just talked about that on all the other charts. If we're going down to where support, like way down here is, it's at 41.15. And there's another support area right in here. Turn that solid around 42.37. 42.34, there's also some support area right around the bottom of this gap. There's some. And if we look, there's one at 42.71. So you can put different time frames, will show you different areas of support and resistance. I was talking about that on that other chart. That on the weekly chart looks like this big, huge candle. But if we go to a shorter time frame, you'll see that there's some support and resistance inside of the big candle. Right? There's some support and resistance inside of the big candle. And as you go down to smaller time frames, maybe you go down to the 15 minutes, another one I'm pretty, we use a lot because we trade SPX during the day. We're trading SPX each day, right? And if you're interested in finding out about that 0 DTE, I do have a graphic that is a freebie. There's some freebies. We got some freebies. There's one for the 0 DTE. Let me make sure. Nope, I don't want that. The 0 DTE HTTP 0 DTE cheat code. The 0 DTE cheat code is something you can grab. It's a freebie, and will give you the 5 steps to using your credit spreads for 10% profits each day. That's a free something you can just grab hold to and check it out. See if that's useful to you. I see Raymond said, thanks so much, Arlissa. When playing credit spreads, either call or put, how come it says covered? It says covered because it's covered by another option contract. So when you're, if you do a regular covered call, generally that's covered by you having 100 shares. When you're trading a call credit spread, basically that is covered by the 100 shares that is inside of that other call contract, the bought call contract. That's what's covering it. So that's why you'll see it saying that. Even on the put side, if you're selling a put credit spread, then the bought put is your cover. You either got to cover it with cash or you got to cover it with shares. So it's either with money, right? Or with an options contract that has 100 shares, or you got to have 100 of the shares. That's why you'll see that it says covered. Okay, that was a really good question. Anybody else? I'm going to stop sharing now, or did I already? Oh, there it is. Stop sharing. Okay, we have spent a great hour and some change together. I sure hope you all got great value out of this. Again, if you didn't like this, you didn't subscribe to the channel, please go ahead and do so. Subscribe to the YouTube channel. That way you'll always see the stuff we got going. If I was going through all that charting stuff and you're sitting there with your eyes bugging out because I don't know what you're talking about, you need to join up to the workshop. Okay, you need to hop on in the workshop. So that way you can be over there and you won't be worried about whether or not you understand what's being said. But all of the stuff that we talked when I talk about how do we pick strikes and what do we do, whether you're buying or selling. I didn't talk about things from a buying standpoint because I'm not a buyer's coach, but I could because I know how to identify where would be places for you to enter or exit if you're buying calls and buying puts, right? You use that chart no matter what strategy you're using. That chart is required. All right. No matter what strategy you're using, you need the chart. So when you join, if you are going to join the workshop, it doesn't matter if you're a buyer of options, a buyer of shares, a seller of options, a seller of shares, whatever you are, that workshop is going to be for you. All right. The workshop is for you. Para ti. Para ti. The workshop is para ti, which means it's for you. Okay, I know a little bit of Spanish. I told y'all I lived in Guatemala for 2 years. Okay, you all. In my community, we hang out together every single day. We have a membership where we have calls in the morning. We trade together during the day. We have an exclusive Telegram. You can check that out more perfectly if you'd like to go and check us out at my website. We have that. So many different courses and trainings I have on all the strategies that I talk about are also at my website. Definitely be sure to follow and subscribe to the YouTube channel. Find me where. If you want to send me a message and ask me some questions, feel free to do so. I answer as best I can. Sometimes people really want to get a little more in depth, and we don't get too in depth in an inbox, right? I will guide you to a resource that will help you. And a lot of the stuff is on my YouTube channel, so you can find some stuff there. All righty. But we're going to do two things. Oh, where's the website? Let me go ahead and give you my website. Don't want to be missing out on that. HTTP, boom, boom, educator. Oh, come on. Typing too fast. Educator2Trader.mvsite.app. I had to change it. It's really just educator2trader.com. But when I type it on here, Facebook does their thing. But it's educator2trader.com is really what it is, right? But you can go directly to that link in the comments, and that'll take you where you need to go. The trainings are there, the membership access and all that stuff is there. Talking about the workshop is there. If you want a one-on-one consultation with me, if you don't need all that other stuff, but you just need me to work with you one-on-one to get you, on the right path and get you a good little strategy set up for just you, then that's on there too. There's a one-on-one icon there for you to sign up and do a one-on-one with me. All righty. Well, we're going to wind it up. We definitely are, Sandy Francis. We're going to stay green, and we're going to get this money. I sure do appreciate y'all for hanging out with me, and I will see you later. Find me on YouTube. I'll see y'all later. Bye. Bye, everyone.